In this video, we're going to talk about how to feel about your losses in the stock market. Hi, my name is Shyam Ganesh and I'm with Grow Your Wealth Financial Planning. Oftentimes I get asked the question, how should I feel about my losses in the stock market? Now, the question I would ask you is, what did you invest in and how did you come about those investment ideas? So did you do any research? Did you hear some ideas from a friend or in the news? How did you come up with the investment? The second question I would ask is, what type of investment was it? Was it a stock? If it was a stock, what type of company was it? Was it more of a startup company, something that had just come into fruition, a fresh kind of upstart company? Was it a more established company? Oftentimes, when I see investors who have had the experience of losing money in the stock market, it's because one of two things happened. The first is if it was a more speculative, a newer company that just went to zero. Maybe it was a penny stock to begin with, but maybe it was not a penny stock. And by penny stock, I mean stocks that are worth less than $1 to buy. Typically indicates those are higher risk stocks that aren't as established of companies. But essentially what happened is, no matter what the purchase price of the stock was, it was a more speculative company, and that company actually did not perform. They were not able to establish themselves as a viable competitor. They were not able to generate profit, and therefore their stock valuations were significantly dropped because of their performance. And if that company does not have a way to recover, then that stock will remain very, very low, maybe even close to zero. And with little chance of recovery, that is more or less now a permanent loss on your book. So I've seen that happen. I have also seen investors who try to time the market. So maybe they do have some smaller stocks like this, or bigger stocks even, but they try to get in and out when they think is a good time for the market, or when there's too much risk in the market. And typically those decisions go wrong when they're, instead of being driven by research and facts and objectivity, when they're driven by emotion. So by the time someone's talking about a particular stock, if there's a lot of hype in the news about a particular stock, on the upside, so man, this is doing really well for me. Well, by the time people start talking about it, the cost of the stock has started to rise because more and more people are getting into it. Word of mouth is spreading, and more people want in on the action. And let's say there's then the news that comes around that the company didn't perform or isn't performing. Well, again, the same thing happens. Like, one person starts to panic or be disappointed even, and then they sell, and they're willing to sell for a bit lower just to get out because they think it's going to keep going down. And then that then creates a spiral of like more and more people selling, which then creates a downward pressure on the stock itself. And so what you want to avoid is being the investor who makes the decision based on emotion, based on what are other people saying and at work or in a forum online, because by the time people are talking, it's too late. And so lots of people have lost money because they tried to time when to get in and when to get out, and their decisions were more based on the emotion of it and not based on any kind of research of how much that stock price should be, what the intrinsic value is. Because you can, if you want to learn more about investing, there's a type of investing called value investing, and in that approach, you essentially calculate the value of a particular stock. Now that works better with if you're investing in larger companies, well-established companies. And there are many other methodologies for evaluating formally an investment. There's all kinds of charting that's available. So lots of different ways. And so if you don't have a particular way, you're doing it based on news or based on emotion, then that can result in losses. And I guess, going back to the question of how do you feel about those losses? Well, I suppose, no one likes to have a loss. It always sucks. It's always going to suck to have a loss. And so the question that I would ask is, what do we need to learn from that experience about our own propensity for risk and our willingness and ability to dive in and become a professional investor? So, the first question is around, did I enjoy that? Does it make me want to learn more, or does it overwhelm me? Does this becoming too much and it's not an area of, that you want to become an expert in? Well, if it's the latter, then, the learning is that maybe it's worth delegating that responsibility to an investment management firm. That's what they do all day long. So, interview a few. There are steps you can take to identify a good investment management firm, but do that, and then delegate the responsibility of managing your investments. The other result or conclusion you might draw is, okay, you know what, I hated losing money, but I'm actually motivated and I have time to learn about how to invest. Well, in that case, maybe take a course on how to invest in the stock market. There's lots of courses on Udemy and all these other online platforms. Lots of coaches. If you're, willing to spend $20 or $20,000, there's a program for you to learn how to do it. So if that calls your name, then, take more ownership of it and go into actively learning a particular approach for investing. So while it always sucks to lose money, I think, as long as you learn from it, you make better decisions next time because you've learned from it, then you should feel great. You should feel great that you're using that experience in a positive way. Thank you so much for joining me in this video, and I look forward to your comments. Please do share, like, and let me know if there's anything else that's on your mind related to finance, investing, financial planning, taxes, real estate, whatever finance related. Look forward to hearing from you. See you next time.